Welcome to the recorded version of Navigating Long-Term Care Insurance, part of the Family Caregiver Support webinar series brought to you by the American Society of Aging and a generous sponsorship from Home Instead Senior Care. Okay, our presenter today is Lakeland Hogan. Lakeland is a gerontologist and caregiver advocate for Home Instead Senior Care. She works to educate professionals, families, and communities on issues older adults face. Lakeland is a doctoral candidate at the University of Nebraska, Omaha, where she is studying social gerontology. She has a Master of Arts in Social Gerontology and a Master's in Business Administration from UNO. Lakeland has professional experience in the private and public sectors of senior care services. She has worked on special projects for UNO's Department of Gerontology and the local area agency on aging. Lakeland serves as Vice President of the Board of Directors for the Dreamweaver Foundation and is active in the Alzheimer's Association's Walk to End Alzheimer's. Lakeland has a passion for helping others, especially aging adults and their families. And with that, I'd like to turn the floor over to our presenter this month and every month, Lakeland Hogan. Welcome, Lakeland.
Thank you so much, Steve. Hello, everyone, and Happy New Year to you all. I'm so glad that you're able to join us today as we kick off our 2019 Family Caregiver Support webinar series. And as Steve mentioned, this is a monthly webinar series, so I do hope that, at the start of this new year, you'll take a look at the whole year's schedule, with the monthly webinar and sign up for the ones that you find interesting throughout the year. So we're going to start things off this year by talking about a topic that can sometimes be overwhelming and confusing, and that is long-term care insurance. When I work with families, I find that navigating long-term care insurance can be very overwhelming, and all of the terminology can be really confusing. But this type of insurance can be an important way to fund long-term care services that older adults are likely to utilize in the later years of their life. But again, these policies can be lengthy, they have fine print, they can be full of those confusing terms and conditions. And so my hope today is to bring some clarity to the topic of long-term care insurance in today's webinar. So I thought I'd start by outlining the objectives for today. So it's my hope that by the end of the webinar, you'll learn the definition of long-term care insurance and what it all entails, and then have a better understanding of common policy benefits and also the types of care benefits that are often covered by policies, and also how families can determine if their loved one needs care. And then finally, I'm going to go through some tips on initiating claims, go over some common terminology that oftentimes trips families up and individuals up during the claims process. And then finally, I'll provide some resources for family caregivers and individuals towards the end of the webinar. So that's what I hope to cover today. So I thought I'd just start out by leveling the playing field and give a definition to long-term care insurance. Many professionals in the field, you might be somewhat familiar with this type of insurance, but in order to dive deep into this topic, it's important to first define what long-term care insurance is. And it's oftentimes abbreviated as LTCI because it is such a long term. So you will see that reference throughout the PowerPoint today, but just know that that stands for long-term care insurance. And this is a form of insurance that is generally intended to cover services needed to care for a person later in life. And if a person chooses to purchase an LTCI policy, the policyholder pays a premium over time, and this typically is over the course of many years, even sometimes decades. And when the policyholder reaches a point where they want to use their policy benefits, they then make a claim on the long-term care insurance policy. And these policies are generally a signed contract between the insurance provider and the policy holder. Each policy's provisions are unique to the person, and because of that, it's likely that no two policies are the same, and even policies within the same insurance provider can be different. Sometimes even a husband and wife might have policies that are different. So it's very important to read the terms and conditions of the policy to get the most out of the benefits offered and to really understand the benefits that are specific to the individual policy holder. And in the United States, long-term care insurance plans are often privately funded and purchased by the individual. However, there are some employers that offer long-term care insurance as part of their benefits package and offer long-term care insurance coverage. So that's just kind of a background, a general overarching view of what long-term care insurance is, and then hopefully through the rest of this hour I'm going to drill down even further into understanding and navigating this type of insurance. So first I thought I'd start by talking about the need for long-term care insurance. So when we look at the need for long-term care services in general, there are two significant risk factors for insufficient funds for long-term care needs for those post-retirement or for older adults in our society. And the first is inflation. And really this refers to an increase in the price of services over time. And we are certainly seeing this when it comes to long-term care services. So the services that older adults need towards the end of life, they're continuing to increase in price year over year. Later on, I'm going to talk about a Genworth cost of care study that is done every year to account for inflation and provide some national averages and even some more localized averages to really help families understand the cost of care in the various throughout the various types of services. And also, Genworth does a great job of estimating inflation, that sort of thing. And then the second risk factor for insufficient funds is unexpected costs of health care. And studies show that oftentimes older adults generally underestimate their cost of care that will be needed at later life. They're also often unsure that they will need long-term care services in the future. And as a result of these risk factors, we know that many older adults do not save as much as they should or as much as analysts have estimated is necessary to cover their long-term care needs in end of life. And it can kind of be confusing. You're probably thinking, well, she's saying long-term care and then long-term care insurance. All of these terms can kind of be confusing. But again, just to clarify, long-term care services are things such as nursing homes, assisted living, in-home care services, home health care. Those are types of long-term care services. And again, long-term care insurance is one type of insurance that people can purchase for those long-term care needs towards end of life. So again, I just wanted to pause there and differentiate those two terms. They're very close together, but we do know that at least 70% of people age 65 and older here in the U.S. will need some sort of assistance with those activities of daily living. So they will likely need some form of long-term care services in their life. And so older adults, we hope, have planned and saved for those care needs down the road. One of those options, again, is to purchase long-term care insurance. And so that's why we're diving into this topic today. And in an ideal world, long-term care insurance would be affordable and available to everyone. However, we know that's not practical, and the industry is actually finding that long-term care insurance might not be the most sustainable option. We're going to look at some statistics here that will show us that on the next slide. So when we look at the current market in terms of who is insured by long-term care insurance and then the policies that are being sold over the years, we do know that about 8.1 million Americans are currently protected by long-term care insurance. They're insured with a long-term care insurance provider. And while that seems like a large number, when you take a step back, it's really only about 20% of the 65 plus population. We know that today there's over 46 million people age 65 and older in the U.S. So long-term care insurance really only impacts about 20%, but that's still a large number. And while long-term care insurance really gained popularity in the early 2000s, in more recent years, we have seen the market become stagnant. It's not really growing. It's kind of staying the same. So as you can see on the screen, Figure 1 shows or reflects this trend that I just described. So you can see an increase in the number of lives insured in the early 2000s, and then we really see it start to level off. And this chart does include individual and group plans. Around 70% of policies are for individuals, and about 30% are group policies. And then if we look at Figure 2, it shows the sales of new long-term care insurance policies. And as you can see, it really hit a peak between 2000, 2004, or 2002, 2004, and then has really been on a decline since. So we've seen more of a dramatic decrease, not only in individual sales, but also in group market sales. And today, there's actually less than 0.5% of employers that offer a long-term care insurance benefit. So that just goes to show that there are definitely still a lot of people insured by long-term care insurance, but there are actually new types of insurance offerings, or hybrid combination offerings today that are more appealing to the market. And we're going to take a look at that here on the next slide. So while the number of traditional long-term care insurance policies have become kind of stagnant, there's not a lot of growth in the traditional long-term care insurance policies, there is growing popularity in these newer offerings. One area of continued growth in the market is these combination or hybrid products. And these products combine a long-term care benefit with either a life insurance or an annuity. They can pay out if long-term care services are needed, but if they're not needed, there is a death benefit or an annuity payout. And then in cases where the individual uses some but not all of their long-term care benefits, the remainder is likely to be paid out as a death benefit. So this is one of the principal appeals of these combination products. And if a long-term care service is never needed, there's still a return on the money that is invested in the premium, which has not generally been the case for traditional long-term care insurance policies. And so when you look at the chart on the slide, you can see that traditional policies are in blue and the new hybrid offerings are in red. And you can see that the hybrid or combination offerings have seen an increase while those traditional policies have kind of dwindled or stayed stagnant over the last couple of years. And these hybrid products are also appealing because they're easier, somewhat easier to explain and understand, and a lot of times individuals are used to buying a life insurance policy. It might be common practice for many people, so adding a long-term care insurance rider or long-term care benefit to that insurance policy, life insurance policy, might be an easier sell than just a standalone long-term care insurance policy. So that's just kind of an overview of where the market has been, where it's kind of going. So just wanted to show you some trends. But there are a lot of individuals, again, about 20% of the aging population does have these policies, and they are using them. So let's look more so now to the utilization of long-term care insurance. So earlier I mentioned that there's about 8.1 million Americans that have a policy. In 2012, about 264,000 individuals received long-term care insurance benefits, and the average value of each claim was costing around $119,000, so almost $120,000. And this covered approximately 2 years of care for the policyholder. And for those who did initiate a claim, over half of those claims are starting in the home. So individuals with policies, about half of them are hoping to stay at home and initiate their claim to bring services in the home, and the remainder use their benefit for other types of care, which we're going to outline the different types of care that is often covered by long-term care insurance in just a bit. So if we look at the graphic on the slide, this offers up some more current numbers, and it's based on the 2018 American Association for Long-Term Care Insurance's annual claims paid survey, and it represents the total of all claims paid for traditional long-term care insurance policies during the year, and this number is in billions, and the number of individuals that are on claim. So you can see that the cost of claims has risen over the years, and Some of the reasons for this is that individuals are living longer. We have a longer lifespan, and as a result, there is higher utilization of long-term care services under claim, and there's also a rising cost of care. So as a result, there's a rising claims cost that has led to a number of insurance companies actually opting out of the market. So we've seen a lot of mergers and acquisitions in this long-term care insurance space, and it's really left a handful of providers that are currently selling and providing claims for long-term care insurance. So now that we know, again, some of the statistics behind long-term care insurance, I now want to switch gears and talk more about what individuals and families need to know when working with their long-term care insurance policy. Since policy premiums are often paid for many years or even decades before they're utilized, there's important things for individuals and families to know before they initiate a long-term care insurance claim. And first, we need to acknowledge the fact that these long-term care policies, insurance policies, are contracts between the individual policyholder and the provider. And again, each policy is unique to the person, which means that it's likely that no two policies are alike. Again, even policies from the same insurance provider can differ. It's all based upon actuarial science that takes into account many factors specific to the individual policyholder. So when we're talking with families, just because you have worked with an individual who had a, let's say, Genworth policy, you've worked with them in the past, and now you have a new individual that you're working with a Genworth policy, it doesn't mean that those two policies are the same. They could have some of the same benefits, but it's really important to read that individual policy to learn what benefits are available to that individual policyholder. And when some of these policies were written, especially the early policies, they tend to be more limited in their care options. When long-term care insurance was first offered, oftentimes nursing home care was one of the few long-term care services available, and therefore they might not account for the different options for care that are present today. So we are finding that long-term care insurance is becoming more flexible than it once was, and oftentimes families can, or an individual can make an appeal or offer up an alternate plan of care, which I'm going to go over more details on that later on. And then, as I just mentioned, many insurance companies have gone away from selling long-term care insurance. Again, the company that the individual bought the policy with, it could have been sold, it could have merged with another organization. So we need to acknowledge the fact that individuals might need to double check on the current company that is holding their long-term care policy. It might not be the same company that they bought it with years and years ago. So if you're able to locate the documentation, that can help in determining the long-term care insurance company that you would need to file a claim with. And locating that policy, locating the policy can sometimes be a challenge in and of itself. So I do want to offer up some quick tips on how to locate a policy if the individual or family you're working with does not know where the policy is or how to locate it. So when trying to understand the benefits that are covered by the policy, it's best to get a copy of that policy in its entirety. You might have to contact the long-term care insurance provider to receive a new copy of the policy, but this policy again will really help provide a better understanding of the benefits that the individual is eligible for and provide details about those benefits. And again, if they're unaware of where the policy is located, some of the places that are most common that people store these policies are in a safety deposit box, in a household safe or filing cabinet. And if you look in those places and you cannot locate them, you will want to try to reach out to the insurance provider You can even reach out to the insurance agent who sold the policy, or if the individual worked with a financial advisor, you could reach out to them. And then also you can look to those past billing statements. Oftentimes those statements have important information such as the policy number, the customer service line, etc. So you can reach out directly to the insurance carrier to be provided with a new copy of the policy. And if an individual is looking for their policy, it's likely that they're looking for it because care is needed at this time. And sometimes families have trouble deciphering the type of assistance they need. So I thought I would offer up some insights that could be helpful for families to look for when determining if their loved one needs some additional assistance. And this can go, this is more general towards all older adults, whether or not they have long-term care insurance. But there's really 10 signs that we can look out for in older adults to determine if care might be needed. Now, it might not necessarily mean that extensive assistance is needed, but it might just mean that families need to do a little bit of digging to uncover some underlying issues and possibly provide some extra assistance to their loved ones. So key things to keep an eye out for is household bills piling up. Some older adults might become overwhelmed at the simple task of opening and responding to mail, and oftentimes cognitive issues are first noticeable when writing checks, paying bills, dealing with financial matters, and this can sometimes impact long-term care insurance, especially if they are confused by the statements, or hopefully they haven't stopped paying their premiums, because that could impact their benefit eligibility and the opportunity to make a claim on that insurance. But again, just something to be mindful of. If they're reluctant to leave the house, it might be that they're having health issues that prevent them from physically leaving the house, or they might be pulling away from their community and isolating themselves due to depression, or again, maybe a cognitive issue, something of that sort. You might find a loved one losing interest in meals, and this might be a sign that they need some extra assistance in the home. Maybe they suddenly find themselves alone after the death of a spouse. Maybe they're no longer able to cook for themselves due to the complications of a chronic condition such as arthritis. Preparing meals might be more challenging for them, so that could be a sign to look out for. Declining personal hygiene, changes in a person's appearance, body odor, somebody who is always so put together and well-dressed, if they're starting to look a little disheveled or wearing the same clothing multiple days in a row, that might be a sign that they're needing some assistance with their personal hygiene or their activities of daily living. And we're going to cover that in just a little bit. And then an individual might have declining driving skills, and that might be an indication that they need some extra assistance. You might find evidence of parking tickets, speeding tickets, fender benders, dents, scratches on the car, and that might be a sign that the older adult could use modifications to the vehicle in order to continue driving or alternate transportation options. And there's a few more signs that we can look for when an older adult might need some extra assistance. Cookware that's left or forgotten on the stovetop, those scorched pots and pans, they might be a sign of memory loss or dementia, and that could be an indicator that the loved one's family should get them a doctor's appointment for further evaluation. Some possible signs of depression, hopelessness, despair. Again, if they're withdrawing from visiting with family or friends or getting out to those regular activities, that can be a sign that maybe there's an underlying factor that needs to be addressed. Maybe some additional assistance is needed. Also, missed doctor's appointments and social engagements. Again, this could be a sign of forgetfulness or depression. It might also be a sign that they're no longer able to get out and about or have a health issue that would prevent them from transporting themselves to these appointments or social engagements. So it would be important to find out the underlying issue here and find alternate options for transportation and still getting those social engagements, which we know are so important as we age. And then an unkept house. Changes in housekeeping routines might come about because of a physical health issue. They might not have the stamina that they once did to keep up with the house. So it might be something that family members jump in and help with, or it might be a sign that there needs some additional assistance for those types of matters. And then medication management. We know that oftentimes older adults take multiple prescriptions for various health issues, and keeping track of those medications can be challenging. So if there is issues with keeping track without reminders or mixing up medications, it might be a sign that some extra assistance is needed. And when I go through these 10 signs, just because a family notices one of these does not automatically mean that they need care. However, it's worth the family doing a little investigative work to find out the underlying issues behind these signs and to work with the older adult to find a solution or get them to a medical professional for further evaluation. So, if one of these signs are being exhibited, it might not mean that they need to jump right in and initiate a claim with long-term care insurance. However, if the multiple signs are evident and the family does some investigating and realizes the older adult might need some assistance, it might be worth initiating a long-term care insurance claim. So again, just wanted to put those signs out there that we can pass along to families so that they can help to ensure that their loved one is safe and well cared for in their environment. So if family does determine I'm noticing some of these signs, and it seems like my loved one could use some extra assistance. I know they have a policy. We're thinking about initiating a claim. There's some important criteria that needs to be met in order for the individual to be eligible for those long-term care insurance benefits. So I'm going to talk about that next. So when we look at long-term care insurance, nothing can happen in a policy until that policyholder is considered to be benefit eligible. And this benefit eligibility then triggers the long-term care insurance benefits. So most policies look at either assistance needed with activities of daily living, or ADLs, or cognitive impairment. Most policies consider ADL assistance to be at least standby to help make sure that the policyholder remains safe doing those activities of daily living. And some policies require full hands-on assistance with ADLs before becoming benefit eligible. Again, that's why it's so important to have a copy of the policy to dig into those details regarding activities of daily living. And if the individual has cognitive impairment, they would become benefit eligible when they progress in the disease to a point where they need supervision. So when determining the type of assistance needed, it's really important to understand that assistance is generally broken down into two categories. So we have those ADLs, those activities of daily living that I just mentioned, and those ones are oftentimes within a policy benefit eligibility triggers. And then there are instrumental activities of daily living. So I'm going to go through both of those quick just to differentiate the two. So when we look at the levels of care needed, instrumental activities of daily living are often things that an older adult first needs assistance with. And they're activities that are instrumental to our daily routines, such as driving, meal preparation, housework, shopping or errands, managing finances, medication management, using the telephone, responding to emails, those types of things. Oftentimes, family members and friends are the first to step up and assist with these IADLs, these instrumental activities of daily living. And sometimes families do hire professional caregivers to assist with these tasks. However, the majority of long-term care policies do not consider IADLs to be benefit eligibility triggers. So they do consider activities of daily living to be triggers, and that's what I'm going to go over next. So again, I wanted to differentiate that IADLs are in most cases not a benefit eligibility trigger, but ADLs are. So ADLs, or activities of daily living, are also sometimes referred to as custodial care. And ADLs are basic activities and functions performed on a daily basis that are usually done without assistance. Generally, an individual has to be in need of assistance with 2 of the 6 ADLs to become benefit eligible for their long-term care insurance policy. So if an individual needs assistance with 2 of the 6, and those 6 ADLs are eating, dressing, bathing, toileting, transferring, and continence. So some policies will even be more specific. Again, as I mentioned earlier, some might identify that an individual has to be needing standby assistance with 2 of the 6 ADLs, or they might indicate that they need to have hands-on assistance. So to give you an example of the difference is an example of standby assistance would be assisting an individual getting in or out of the shower. And you can see that happening there in the photo. The individual might need help just getting into the shower safely. The professional waits there for them, assists only if needed, and then helps them get out of the shower. And then a more hands-on approach to bathing would be helping the individual into the shower, also helping with shampooing, the actual happenings of the shower, and then assisting the individual getting out of the shower. So it's more of a hands-on approach to the care as opposed to just providing that standby assistance. So again, when we look at these activities of daily living, we want to check with the policy to see, okay, yes, they need 2 of the 6 ADLs. Does it matter if it is just standby assistance or do they require hands-on assistance? So again, that is really important and key in determining benefit eligibility for long-term care insurance. So once a person is benefit eligible, then an individual submits a claim for the type of care they wish to receive as covered by the policy. So I'm going to just briefly touch on those common types of care that are covered oftentimes in long-term care insurance. And again, each policy is different, and therefore they might have different covered services. However, I did again want to briefly touch on all of the areas that might be covered. The first is nursing home care, and for many of you listening on the line, you're probably very familiar with these different levels of care, but just want to touch on them briefly. A nursing home level of care is a facility that provides a full range of skilled health care, rehabilitation, personal care, daily activities, and it's in a 24/7 setting. And it's important when we look at long-term care insurance policies to find out if the policy covers strictly room and board or if it covers any additional costs for nursing home level of care. The next level is assisted living. And this is a residential setting with apartment-style units that oftentimes provides, or in almost all cases, provides personal care and other individualized services such as meal delivery. And again, it's really important to understand what the policy covers in terms of assisted living. Some assisted living facilities have a base rate and then charge for additional amenities. So the policy might only cover the base rate, and the individual might need to cover any additional services out of pocket. So again, it's really important to ask those clarifying questions. And then adult day services. This is a program outside of the home that provides health, social, and other support services in a supervised setting for adults that need some degree of help throughout the day. And in terms of adult day services, it might be paid out or covered, at a base rate or kind of a flat rate or an hourly rate. So you again want to check with the service provider to see how they charge for the adult day service, and also check with the policy to see what is covered. So these are services that are commonly covered outside of the home, but there are several services that can be provided within the home. So first is home health care, and this is an agency or individual who provides skilled care. These services can be provided by a variety of healthcare professionals. Um, and again, when you look at the policy, it's important to distinguish how many hours of care is covered in the policy for home health care services, and they also might have a home care benefit. And home care is an agency or individual who performs services such as activities of daily living, and they can also help with those IADLs, those instrumental activities of daily living, such as chores, errands, housework, and so forth. So when considering care at home, again, it's really important to check the policy. Some insurance companies require you to use a service from a certified agency or a licensed agency or by an individual who has a specific license. And some policies do not require that. So again, it's really important to check the policy to make that differentiation. And just to give you an example from my own time working in this field, I've worked with families here, specifically in the state of Nebraska, who have long-term care insurance. And for those who have used home care benefits, the state of Nebraska does not require a license for home care. I know it's one of the few states left in the U.S. that does not have that requirement. So some long-term care insurance companies accept home care agencies as covered by the long-term care insurance policy. However, some do not. They require a licensed agency. So therefore, the family, even if they didn't need a home health care level of care, they would still have to go with that agency in this state because they required a licensed professional. Or if the home care company had a certified nursing assistant, they could use that individual for the care as it would meet then the requirements of the long-term care insurance policy. So I just give you that as an example. I hope I didn't cause any confusion, but I just wanted to show how very specific these long-term care insurance policies can be. Just because you live in one state and you have one policy doesn't mean that you can use any provider that fits within the category outlined within the provisions for care in the long-term care insurance policy. So another type of care that might be covered is care coordination. These are services provided by a trained or licensed professional who assists with determining needs of the individual, helps with locating services, and arranges care. So this policy might cover care coordination, and it might also cover the monitoring of care providers. So again, that might be more of a rare policy benefit, but it could be available. And then some policies have a future service option. In a few long-term care insurance policies, again, they were developed possibly at a time when certain types of care weren't even available yet. So it allows for some flexibility to cover new services and new service options that might become available after the initial purchase of the long-term care insurance policy. Okay, so that is the different types of care that are commonly covered. And I've talked a little bit about, the different steps that families need to take when initiating a long-term care insurance claim, but it's much easier to look at visually. So I did come up with a general claims timeline. So if you haven't already downloaded these slides, this can be a great reference point to come back to. And I'll also share a resource towards the end where you can download a free version of a guide that includes this timeline. But when we look at initiating a claim, we really have kind of 7 steps. First, we need to determine if care is needed. I started out with those 10 signs just as kind of a way to get us thinking about how we can help families determine whether care is needed. And then we need to find that complete policy or reach out to the insurance company to request a new policy. Again, so we can dig down into the details. Because third is really to understand what's covered and what is not covered in terms of the policy benefits. And then we need to establish if there is benefit eligibility. We need to make sure that the individual meets that benefit eligibility. So do they really need assistance with at least 2 of the 6 activities of daily living? Or does the individual have cognitive impairment that requires supervision? And oftentimes the insurance agency, once you initiate the claims process, will send an individual from the company. It's usually an RN or a social worker professional out to the home to evaluate your loved one, or they might request proof from your medical professional that you indeed need assistance with the benefit eligibility requirements. And then we need to discover what the elimination period is and how it's measured, and I'm going to go over that here in just a bit because that's also key. And then the family wants to look for a provider that meets the criteria of the policy and really understand if that provider is eligible to provide the service. And again, that goes back to that kind of confusing example I gave about making sure that the provider meets the requirements of the policy. So if the policy requires a licensed agency, does the provider meet that standard? And then finally, work with conflicts early. And occasionally there are conflicts that can arise, and I'm going to get to that in just a little bit. So as families work through this timeline, there are some key terms that are really important to know. And I'm going to start out by talking about the policy amounts and limits. So we talk about determining what kind of care is needed. We also want to be sure that we understand how much care is covered by the policy. So long-term care policies can pay out different amounts for different types of services. So for example, it might be $50 a day for home care or $100 a day for nursing home care. Those are the types of ways that they can break it down. They can also break it down by covering a certain number of hours of care and so forth. So again, it's really specific to the policy, but most policies have some sort of limit to the amount of benefits you can receive, such as a specific number of days or of years or a total dollar amount. You also might find that there is a pooled benefits for certain policies that allow you to use a total dollar amount of benefits for different types of services. So with this type of pooled benefit, this coverage option allows you to combine services that meet your needs. And then it's also important to compare the amount of the benefit with the average cost of care in the area. So when families are looking at the amount that the policy covers, they'll want to do a little research to find out how much care costs in their area. So there's a great website I mentioned earlier, Genworth's Cost of Care Study, and I'll share their website at the end of the webinar here. But they have a great tool that gives you an average cost locally wherever you are, and then also gives you some national averages. So if the policy covers for example, assisted living up to $3,500 a month, but the average cost of assisted living facility in your area is $4,000, the family might be responsible for that extra $500 a month. So that's why it's really important to understand what the policy covers versus the actual cost of care to see if the family will need to pay any additional costs for that type of care. So the next common term that you are likely to come across is an elimination period. This is also an important part to understand about a long-term care policy because the elimination period will help determine when your policy will start covering the cost of care. So for an elimination period to begin, the policyholder must be determined to be eligible for benefits. So again, that's the 2 of the 6 ADLs or cognitive impairment as benefit eligibility. And then once they're benefit eligible, oftentimes the elimination period must be met before a policyholder receives benefits. So I like to compare this to healthcare insurance. It's kind of similar to reaching your deductible. So once you meet the deductible or once the individual meets the elimination period for their long-term care insurance, then the policy will kick in and cover the care. So these elimination periods are often expressed in the number of days that must pass before the actual benefit dollars are paid. So in other words, many times you have to pay out of pocket for the care during the elimination period before the benefits kick in. And a lot of times this is a misconception about long-term care insurance. They might think that it will just kick in right when you file a claim, and a lot of times that's not the case. Most policies, they measure these types of elimination periods in number of days. So it's not necessarily a waiting period, but a lot of times it's the number of days that you actually paid out of pocket for care before the services kick in. So I tried to create a little visual here on the screen to kind of give you an idea of the two most common types of elimination periods. So the calendar in like the bluish green on the left, this is kind of the days of covered service method of the elimination period. So in this example, if Mr. Jones has care 3 days a week, only 13 days in this month will be counted towards the elimination period because, as you can see, I've circled all of the days of care that he actually received and paid for out of pocket. So 13 days of care would count towards his elimination period in scenario 1. Now, if Mr. Jones' elimination period was an elimination period credit, as in the second example, so the calendar in the pink on the right-hand side of the screen, in this case, Mr. Jones, while he's still getting care 3 days a week, the elimination period credit will actually count all of the days of care and the days in between towards his elimination period. So pretty much the entire month will count towards his elimination period. So again, this can be very confusing for individuals and for families when they're initiating a claim and trying to work through the elimination period. So that's why, again, it's important to refer back to the policy and to ask clarifying questions of the insurance provider because you can even ask them to give you an example of what the elimination period entails. So again, tried to paint a picture by using that little visual there. And then the next term that you might find commonly is an alternate plan of care. And this is another term that comes up often when we work with long-term care insurance. And this is an option to propose possibly an alternate to the policy benefits that are laid out in the plan. So I mentioned earlier that some of those older policies, they might not have an option for home care. So in this case, it might be possible to propose an alternate plan of care, or another example could be an individual who has lost her eyesight, proposing that a seeing eye dog could be covered by her long-term care policy in an alternate plan of care in order to help her remain at home. But in cases of alternate plans of care, majority of the time, the individual that's insured, the doctor, and the insurance company must all agree on this alternate plan of care, and it's not always a guarantee. The company does have the right to refuse to participate. And typically, an alternate plan of care is more successful if it costs the company less money than other covered services. And then you might also come across assignment of benefit. This is another term that often comes up, especially regarding the form of payment. And since long-term care insurance is a policy between the insured and the insurance company that contract, the company will pay the individual that's insured unless he or she assigns benefits to the care provider. So what this means is that the individual pays for the care, and then the insurance company reimburses the individual once proper documentation has been submitted by the care provider. However, if the individual just chooses to assign benefits or chooses the assignment of benefits, it then allows the insurance company to pay the provider directly for the services. There are some pros and cons to choosing assignment of benefit. Some things to consider are that some providers will not accept assignment of benefit, or they will not accept it until you've met that elimination period. So again, you need to discuss with the provider if they do take that assignment of benefit. Assignment of benefit can make life a little easier for the policyholder by just rerouting the payment directly to the provider. However, if the individual thinks that they might change care providers, or if they have assigned benefits to one company and want to change, there is some paperwork that can be involved there. So just some things to keep in mind, but this is a common term that you'll see. I talked earlier about addressing any conflicts early on. One might be a denied claim. So sometimes when we are working with long-term care insurance companies, an individual might receive notice that their claim was denied. And there are typically two common reasons why this happens. The first is that it might be denied due to the provider, or it might be denied due to benefit eligibility. And I know I'm running short on time, so I'm not going to go into detail on these two things. I've made this a lengthy slide for a reason. There's a lot to consider, but it's really important to read that denial letter and understand why the claim was denied. If it was due to the provider, perhaps there's some additional documentation the provider needs to provide the insurance company, or this might be an opportunity to then propose an alternate plan of care. Again, that's not guaranteed to work, but again, it's important to understand why that claim was denied in order to find a resolution. And also, if the individual is denied due to the benefit eligibility, we want to seek, again, the reason why, clarify the type of activity of daily living or cognitive impairment that they did not find that met the benefit eligibility, and it could also be a lack of proper documentation. So again, if you do get a claim denial, it's important to hang on to that documentation, and you might also submit or look into submitting an appeal to this denial. So I'm going to briefly touch on appeals because that's another term that sometimes we hear when working with long-term care insurance. So again, if this claim has been denied, the individual might have the option to initiate an appeals process, and each policy typically has an appeals process outlined in the policy, or the insurance company is likely to have instructions on how to submit an appeal to their claims department. So it's important to either look within the policy to find out what the process is to appeal a denial, or reach out to the individual insurance carrier to find out what their appeals process is. And then before we jump into some of the resources, I did want to just touch on the fact that some long-term care insurance policies do offer durable medical equipment and home modification benefits. So these aren't necessarily considered care needs, but they might help the individual remain safely at home. So oftentimes, an individual, if they have this policy benefit, would be eligible perhaps for a toilet seat riser, walker, wheelchair, might also be eligible for installing a walk-in shower or grab bars or even a wheelchair ramp. But oftentimes the individual still does need to be benefit eligible. So again, it's important to read the policy to see when the benefits when these types of benefits might be available to the individual. So I'm going to run through some resources quick. First is some important questions to ask. I've touched on almost all of these throughout today's webinar, so I'm not going to go through them one by one. But this is a great set of questions to pass along to family members once they've started inquiring about, I have a long-term care insurance policy, I'm hoping to initiate the claim, what do I need to know? And you can actually find these questions and that general timeline I referenced earlier in this resource guide, which you can download for free. You can download it at caregiverstress.com LTCI. It's a great document. Again, kind of goes over a lot of what I've covered today in a really understandable or easy to understand way, and helps families as they navigate long-term care insurance, which we know can be confusing. And then finally, I wanted to offer up some additional resources. Of course, the American Association of Long-Term Care Insurance, they have a lot of great statistics on their website. And there's also a long-term care insurance study that you can find at the site listed there. AARP also has some great literature out there on helping individuals understand their long-term care insurance. And then finally, if you want to find the cost of care in your area or look deeper into national averages on the cost of care, you can visit Genworth's site and then search for their 2018 cost of care study, their most recent one. So with that, I know I covered a lot of information and had to kind of rush through the last few slides. I apologize. This is the first time I have given this presentation in this setting, so next time I'll leave more time for questions. But with the few minutes we have left, I will turn it over to Steve for a couple questions on long-term care insurance. Thank you all so much for listening.
Okay, first question. What's the difference between LTCI and long-term disability insurance?
That's a great question. So oftentimes long-term care insurance is something that is purchased with kind of the I don't want to say the end in mind, but for those long-term care needs post-retirement, long-term care disability insurance, from what I understand, and I'm not an insurance expert on long-term care disability insurance, is for those situations perhaps before even retirement when you would need to take time away from the work setting for a medical reason or otherwise. So there is a bit of a difference, but generally that long-term care insurance, the type that I covered today, was at least originally intended to cover long-term care needs after retirement. Good question.
Okay, great. Next question. Is there an age limit on purchasing a long-term insurance policy?
That's a really good question. Technically, there's no age limit to purchase a long-term care insurance policy. However, we do know that the younger the policy is purchased, the more affordable it will be. There is kind of an actuarial science which is really based on the individual. An individual who is 75, who maybe is not in the best health, they might not qualify for long-term care insurance versus an individual in their 50s is probably more likely to qualify. So that is something that you would have to talk in detail to a financial advisor or an insurance agent about to see if you would qualify for long-term care insurance. But we do know that the younger you purchase, the more affordable it will be. And the closer you get to retirement age to needing those long-term care services, the more pricey a long-term care insurance plan would be. But actually in the Navigating Long-Term Care Insurance Guide, again, you can download that at caregiverstress.com/LTCI. Part of that resource guide has a great section on what to consider if you want to purchase long-term care insurance. We find that adult children, once they see their aging loved one go through needing long-term care and the family is scrambling trying to find ways to pay for long-term care, they then kind of wake up to the fact that they too one day might need long-term care insurance. So we see adult children oftentimes inquiring about that. And they have, again, those traditional long-term care insurance policies, but those more those newer hybrid combination policies are also available. So definitely check in with your financial advisor or insurance agent to learn more specifics.
Okay. Lakeland, we have reached the end of our hour here, and unfortunately we're out of time, but I want to thank you for a great presentation today. Thank you so much.
Thank you. Have a great day, everyone.